Welcome to Pro Trader Strategies Market Commentary for Tuesday, October the 27th. I'm Eric Wilkinson, and you very well may recognize me from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes in to impact the markets with my market analysis. I do the same thing for you folks in these daily market commentaries, but I'm going a little bit further and talking about the option strategies that I implement into my portfolio based on those assumptions we come up with in that economic and geopolitical and market analysis. What I've done though for you with these option strategies is streamlined your process in order to implement these strategies. We've come up with a finite roadmap for you guys all to find the right strategy for any given assumption based on what's going on around that underlying. I know that you guys out there have probably struggled like most people and tried to find the right indicator to give you guys the best probability of finding the right directional assumption. Well, I'm here to tell you that I've done the same thing over my course of 25 years, trying to find the tea leaves and really figure out what's going on for a directional assumption. But what it ultimately comes down to, not only just having a directional assumption, that is pretty important, but it's not the end all be all. The best way to increase your probabilities of success and make money in the markets is to use options. They have the highest probability of success. All right. So if you're going to try and figure out the best way to trade, your directional assumption is only a little bit of that. Really, what is more important is finding the right option strategy in the right environment to make money over the course of a long time. All right. Anyway, let's talk about the economic data. Across the pond, not a whole lot other than LVMH, not really an economic data point, but they have gone through and decided that they are going to go through with the purchase of Tiffany's. We'll go through that here in a little bit. That's the only thing going on across the pond, really. All right, we did get here in the United States core durable goods orders coming in at 0.8%, expected to be 0.3%, so a little bit better than expected there. That's good to see. It shows some demand there. Also a revision to last month's number, up a couple of tenths. Durable goods orders, which, remember, core durable goods is going to strip out things like transportation items, but these are items that we purchase that are going to have a supposed lifespan of 3 years. It doesn't seem like electronics necessarily do that anymore, but that's what we're talking about. Well, when you pump back in those transportation items, durable goods comes in at 1.9%, expected to be 0.5%. So people out there buying automobiles, all right? And we've talked about this since the pandemic began, right? We're talking not only just cars, we're talking motorcycles, we're talking RVs, all of those things. People are going out there and buying because they don't want to ride share anymore. They don't want to jump in a taxi. They want to have their own space now, and that is showing up in the durable goods orders. Also, we got the Richmond Fed manufacturing coming in at 29, expected to be 18, so knocking it out of the park there. Consumer confidence came in a little bit lower than expected at 100.9, expected to be 102.1. Not really sure why that number came off a little bit, other than the fact that they're probably the consumers realizing there's no stimulus check around the corner like we were expecting, so that probably waned on consumer sentiment a little bit. All right. Let's talk about the market, see how all of this economic data is affecting them. It's probably not, you guys. The expectations, even during this earnings, we're continuing to see earnings do very well for these companies, but they are still getting lambasted and sold off, especially in the tech sector, throughout all of this. And we do have Microsoft right around the corner. That's going to be an earnings that I'm going to be talking about, implementing a strategy around, probably going to go in on the short side and sell some sell some calls against that earnings. So keep your eye out on Twitter for me to post that, but that's what I'm looking at. There's a lot of economic data this week. It is really ramping up on Thursday, you guys, where we have Google, Amazon, Apple coming out after the close on Thursday in the morning. We have Apron, Dunkin', and Yum. So pretty busy there. this week, ahead of that, we have Microsoft tonight and Boeing tomorrow morning. Six Flags, GE. Probably not going to play GE. Probably not going to play Six Flags, but I'm looking at Boeing and I'm looking at Microsoft. Probably both from the selling call standpoint because my bearish assumption there is intact still. All right, so crude oil trying to make its way up into the 40s, right back above that 50 Fibonacci. I told you that's not going to act as a support and resistance. You can see it's peeling right through it on both days, yesterday and today, back to the point of control, which seems to be the real sweet spot there for the crude oil. Gold futures moving higher by about $5 today. Hasn't gotten back above that line of delineation of 1923. That is what we're really keeping an eye on. Yes, it is still going to act as a support and resistance going forward, I think, for the foreseeable future. We've got bonds moving higher again, and that's probably more a flight to safety, more than the thought that there is a stimulus package around the corner, because it does not look like that's happening. VIX is moving higher. We have a mixed bag in the equities. The weakness is coming from the Dow Jones here, as we saw that yesterday it was leading the charge to the downside. Today, probably one of the biggest laggers on the day, down 150 some odd points, and right back to the point of control. We see we overdid it to that point of control yesterday a little bit further. Bit of a rally back late in the day in all of the equities, but it was pretty much back to key levels, as you can see here with the Dow Jones right back to the point of control. NASDAQ did make its rally, and it tried to struggle and fight, claw, get back above that 50-day simple moving average. It came up just slightly shy of it yesterday, but today moving back above that, with the NASDAQ being the leader to the upside. As you can see, it is in positive territory, whereas E-mini S&P is still a few ticks shy of that. Yesterday, tried to make another rally back towards that 50-day simple moving average, came up again short of that. Something to note here, we are getting price acceptance up here at this 3365, 3370 area. That is looking like we are going to get another shift in the time node and volume node up to this level, which is, more of a bullish indicator, meaning price is being accepted at higher levels. That frees up the market to move higher. So that is something we're going to be keeping an eye on here. Just keep our eyes out for that point of control to shift higher as price is being accepted at higher levels. That gives a little bit more momentum to the upside. Once those prices start getting accepted at higher levels, those shorts start getting really on their heels. Now you can see here is the 30-minute chart for the E-mini S&Ps. When we were talking, there was unabated to the downside late in the afternoon. Looked like some people were looking to take some profits on the short end and looking for bargain buying for longer term investors. So that's, I believe, more of what we were seeing there yesterday. And today, very much an inside day with the point of control and the value area highs and lows lining up inside of what we saw yesterday. So pretty quiet consolidation type trade day. I think a lot of people probably shoring up positions ahead of heading into the earnings that we're going to be seeing on Thursday and later on this week. A lot of really big names, and I think that that's going to kind of meld out the markets. All right, HOG. This goes back to our durable goods orders, right? We saw durable goods orders with the transportation items added back in. Well, HOG expected to have about 30 cents, I want to say 39 cents a share, coming in at 105, knocking it out of the park, saying forward guidance is really strong, and all of those things really driving HOG up 25% today, or up almost $7.50 off the highs, but did trade up higher than $7.50 a little bit earlier today, as you can see. So the market really making some moves in HOG as people are going out there. We saw this with Thor. Remember, I was one of the first movers on Thor, which is the travel coach industry, or fifth wheel, pull behinds, travel trailers, and RVs. Those guys did very well. When I said, hey, people aren't going to go to an Airbnb and stay in somebody's house. They're not going to take the Uber, those kind of things. Well, this is showing up in the numbers now, as you can see with HOG moving higher today quite dramatically. One of the few ones that is beating on earnings and making a rally happen. You can see here we have 3M as well having earnings. I didn't play this trade at all. Something to know about 3M though was these guys have produced over 1.4 billion N95 masks. That still hasn't made it to the consumer level. The retail person wanting an N95 mask can't get it because it is all going to the healthcare sector at this point and to the Department of is it the Department of Defense or but basically the national stockpiles for PPE equipment. So a lot of that being replenished, going to first responders, still not making it out to the public at large, which, you know, really drives the fact that there is demand there and probably needing some more manufacturing sectors here in the United States in order to get these masks out to the broader public as well. But 3M doing very well today, even though they beat on the street. Their sector for healthcare is really going gangbusters. That's mostly going to be that PPE, up 25% or so. So a major added value to 3M on that front. So they're doing a bit of a comeback, especially after the CEO talked and was very bullish with the forward guidance there as well. So they are starting to make a bit of a clawback there, as we can see. All right, so the trades that we've got going on, one of the things I was going to talk about was TIF. Let's just talk about Tiffany and LVMH buying them. It looks like it's going to come in somewhere between 130 and 133. Originally, I think it was around 135. That's when we kind of got this flat line. And then we got COVID and the LVMH tried to back out of the deal. It looks like they are kind of getting hogtied and pushed through with this. They're saying that the COVID should not have really been the determining factor here. So you can see today up almost 5% or almost $6 now on the day. So looking like it's going to trade back towards that 130, 133 area where they are finally trying to hammer out that deal. All right, so Microsoft, we are looking for a trade in here, and I'm going to be looking to sell some calls, probably somewhere, hopefully I can get above 225. That would be a good area, I think, at least to be able to sell into some Microsoft or collect a credit there on a short. So I'm going to be looking at the weeklies in October that expire on Friday, and you know, just first blush looking at the markets, it's 225 is likely the strike location that I'm going to be heading for and selling some calls against Microsoft in that October contract. And then who else was it? Boeing, I'm going to have to short this as well because I just don't think that they have gone anywhere. They're going to not have good things to say. I can't figure out a way that they can put a silver lining on this, to be honest with you. And it's going to be looking like the 167.5 handle that I'm going to be trying to sell for Boeing to the downside. That's it. I'm going to be looking at those two. Like I said, I don't want to add anything or do a whole lot of longer duration trades right now. I want to stay focused on the earnings because this week is going to be gangbusters. It's going to be a margin hog. So I'm going to save some powder for that this week. But I am going to be playing Microsoft and Boeing for a quick trade today. All right. And that's it. That's all I've got for you guys. Please take a moment to go over our disclaimer, as we are an educational company. That is not the disclaimer. But this is a fun one if we're talking about the roadmap to trading options, finding those guidelines. Well, this is some fun stuff that we throw out there for you guys on that on those webinars. The places to hit, spots to go, and we kind of correlate that to our option strategies as well. But what we need to talk about is the disclaimer. please take a moment to go over this, as we are an educational company and there are risks involved in trading. So please take a moment to read over that. And that's all I got for you, other than if you can't take that, take it easy.